Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Hope you guys are doing fantastic. Hope you had a very wonderful week. Well, we had a big surprise today, and that's causing mortgage-backed securities, interest rates to get better this morning, and that's all due to the jobs number that came out today. First jobs number of the year that is released the first Friday of every month, and this month's number was a big stinker. Expectations were for about 200,000 more jobs added to the market, added to the economy, and for the unemployment rate to stay at 7%, which is where it was last month. Well, the numbers were released, and big surprise, there were only 74,000 jobs added to the economy. So that was a real weak number, and in previous months, we've actually seen some strength to these jobs numbers, and that's one of the reasons why the Federal Reserve announced that they would begin tapering the purchases of mortgage-backed securities and treasuries, again, tapering QE3. That was supposed to start this month, or will be starting this month, and this weak number is giving the market some pause to wonder how committed the Federal Reserve is going to be to continue to taper in the upcoming months. They probably still will, but again, all bets are off right now because this data was so weak. So we saw 74,000 jobs only added to the market, but the unemployment rate went down to 6.7% versus 7%. Now, again, why did that happen? We've talked again about previous numbers when there's not a real great correlation between jobs added to the market and the unemployment rate. Well, it's because, again, if you're not looking for a job, if you've retired or you've just gotten discouraged, you're not included in the unemployment rolls. So we saw the labor force participation rate, the percentage of people actually out there working, that decreased to the lowest level since 1978. That was at a level of 62.8%. So again, very weak numbers showing that there's just not as many people working now than there were prior to 1978. So pretty weak data. And again, that's causing mortgage-backed securities and interest rates to get better. So they're finishing the week better than where they started last week, and we'll see if this continues. Next week's going to be a big week with information coming in on inflation with the CPI and PPI. We're also going to see retail sales and a bunch of information from housing. So I'll let you know what happens with those and how the market translates that. But that's what's going on with interest rates today. Again, a stinker of a jobs number is causing interest rates to get better, and that's good. So again, if you got people out there looking for homes, this next week might be a pretty good, or put one under contract, might be a pretty good week to lock. So hope you guys are doing great. If you have any questions, please give us a call. Thanks for joining me with Java with Jared. Talk to you guys soon. Bye-bye.